Hey, I'm Brandon. Welcome to my YouTube series. We are going to be talking about how to succeed as a buyer in a seller's market. Okay, the first thing, who am I? Like I said, my name is Brandon. I'm a real estate agent in central New Jersey. Yes, it exists. And I specialize in Mercer County, but I work in Monmouth, Ocean, Burlington, Middlesex, you name it, except for far north, far south. If you need an agent in those areas, feel free to contact me. I do know people all across the country. I'm happy to point you in the right direction. General offer principles. This may seem obvious, but how much are you offering? You have to be competitive in this market. I know in my area, in central New Jersey, 25 to 50,000 is the norm. Sometimes it can even go over 50,000 for a really nice house, 60, 70, 80,000. It's not uncommon, unfortunately. And of course, as those interest rates rise, you might see that lower, which is what I want to see at least. It's a little crazy at the moment. And I'm sure you would agree. Type of loan. Are you using cash? Obviously, cash is the best, but it's not the magic wand that people think it is. People think if they're using cash that it's somehow going to like secure them the deal with getting a huge discount. It's not. It's just a nice, if two offers are the same and one is cash and one is a mortgage, then obviously you go with the cash, but it's not magic. Conventional, you know, 20% is the number that people tend to look for. If you put more down, people are going to view that as a demonstration of financial strength. So obviously put as much as you can down. Your earnest money deposit is another thing that people overlook. Um, you know, put your whole down payment in the earnest money deposit if you really want to appear strong. That shows that you have skin in the game, that you're not going to violate the contract, you're not going to back out because you had a change of heart. All that really matters. FHA, VA, and USDA. So USDA and VA, 0% down. So obviously you're at a disadvantage. It's not impossible. Okay, I've seen it happen. You have to make that earnest money deposit pretty high. And then you credit it towards your closing. Do the best you can, obviously. I know if you're doing 0% down, you're probably not, loaded with cash to begin with, but do what you can. Put as much in that earnest money deposit as you possibly can. Home sale contingencies. Do you have a home sale contingency? It's almost impossible to get an offer accepted in this market with a home sale contingency. The ideal is if your lender can pre-approve you without selling your home. You make an offer, you find a place, get under contract, and then you list your home for sale. And your agent should be able to coordinate your purchase and your sale, even though they're not contingent, but we're going to close them on the same day or within a week or two of each other. That's the ideal. That way you're not carrying two mortgages at once and paying two taxes at once and all that. But if you cannot get pre-approved for purchase without your home sale, there are other options. You can put your home up for sale first, and you can do a rent back. So you close on your sale, do your rent back, do your UNO, what we call use and occupancy agreement. You're allowed to occupy the home for a negotiated amount of time, usually 2 or 3 months. That way you no longer have a home sale contingency. You're completely closed. Now you can make offers without that home sale contingency that has been holding you back. There are other ways around it too, but we'll move on. Appraisal. This is a huge one. If you offer $1 million on a $200,000 condo, what is the seller going to say? They're not. They're going to be skeptical. They're going to say, "Well, okay," but it's never going to appraise for that. So, what is an appraisal to begin with? It's the lender's way of checking the objective value of the home, so that if you stop paying your mortgage and they need to repossess the house, how much can they realistically get? It's an independent market value assessment. Okay, so in the event that an appraisal comes in low, the lender is only going to lend on that appraised value. Okay, so let's say you agree to purchase for 300, appraisal comes in at 280. Okay, that means we need to renegotiate the sale price. In most cases, it depends how attorney review goes. Sometimes you'll say you'll address this proactively. Sometimes a seller who's being represented by an attorney will say that in under appraisal does not give grounds for renegotiating of sale price. But I'd say in this area, that is the norm that we renegotiate. Um, However, in this market, super hot seller's market, buyers are almost always proactively making up the difference in appraisal and purchase price. So the first thing you can do is talk to your lender, see if they'll give you a waiver for the appraisal. Say, is it absolutely required in this case at this purchase price? Sometimes they'll tell you it's not required. You can waive it. That's the best thing that can happen to you. Second thing, you can make up that difference. So in the example I just gave, you would pay that $20,000 differential out of pocket, and then your loan amount would then be lowered to 280. Your purchase price would stay at 300, make up the difference, loan amount 280, and then whatever percent down you're doing would then be moved to that 280. Now you can play with the amounts. You can lower your down payment so that you have the cash to make up that difference. It's something that you can do. Just talk to your lender, make sure you have enough left over for closing costs after you make up this difference. There's another option which is not common at all, but my preferred lender at Finance of America in Hamilton, New Jersey, this is something innovative that they came up with, to my knowledge. It's called buyer paid mortgage insurance. And what it does is it's a one-time premium that the buyer pays. Usually it could be anywhere from like 3,000, 5,000, 7,000. And instead of paying that full 20, essentially you're paying for an insurance policy so that the lender doesn't take on as much risk. So in the event that you stop paying your mortgage and they need to foreclose, they need to repossess, they have this insurance policy to cash in on. And that's why they're willing to lend on the appraised value. Lend on the purchase price, even though the appraisal is low. So this is a nice, a nice thing for people who don't want to cover that full 20,000, or if it's an even bigger gap, which is not uncommon. If you don't have the money to make up $40,000 differential, BPMI can be a nice way for you to still get the house at the purchase price while not draining your bank account fully. So this is a nice option here. Inspections. You can make, this was what we were doing for a long time, make your inspection request limited in scope. Okay, not the inspection itself, but the repair request. You're proactively saying, hey, we're not going to come at you for, nail pops in the wall or this needs caulking or whatever. Small things, nickel and diming. But we are going to say if radon levels are high, we're going to ask you to remediate the radon. If there are major termite issues, structural things, heating, cooling, whatever, mold, you want to highlight those things that are going to be fair game for you. And if they don't fall within the bounds of what you outline, it's not going to be considered. It's going to be considered a breach of contract. But this is a way to give you an advantage against other buyers who don't do that. Now, this is really common these days, so almost everyone's doing it. So now you have to kind of do something new. A lot of people, they either waive it or they make the inspection for informational purposes only. I don't recommend waiving it. It's a huge risk. If there's something majorly wrong, if the foundation is buckling, okay, that's a major problem. You don't want to buy that house anymore. You need to give yourself an out. So that's where we come with informational purposes only. And you need to make sure your attorney disambiguates this language during review. They say, we're doing our inspection, it's for informational purposes only, but we have the right to cancel if something big comes up. And they can write this a number of ways. They can outline specific issues that you might run into, oil tank, for example, or whatever. Or if there's something that costs more than $50,000 to remediate or something like that, you can always do that as well. Okay, number 4, escalation clause. So an escalation clause is really nice because it allows you to make a really strong offer without overbidding. So let's say there's a house that's listed at $300,000 and you need this house. Okay, you tell your agent, I need this house so bad. I'm done looking. This is the house for me. And you, in a normal situation, you would have to kind of guess if there were multiple offers. Let's say there's 10 other offers. You're going to have to guess where people are coming in. And you want to be aggressive enough, but then you think, is this too aggressive? Am I overpaying? If you make an offer for 360, let's say, and maybe the next offer is only 340. You didn't have to do that extra 20,000. So what I like about escalation clauses and what listing agents don't like is that when you make this offer, you say, we're going to beat the top offer by 5,000 or 7,000 or 3,000, whatever it might be. That way you're only going to be that much higher than the highest other bid, okay? And that allows you to be the top offer. without going crazy. Now, you can limit how much you can escalate or not. It's your choice. You can, limit it up to your pre-approval amount. Maybe you're only pre-approved up to 350 in this situation. So maybe you do an escalation of 5,000 up to 350. That's your ceiling. That's as much as you'll escalate. But if you really like a house and you're well within your means, there's nothing that will stop you from escalating with no limit. I've had a lot of clients use that with much success. So I highly recommend using an escalation clause. Just know that in some cases, sellers or listing agents won't entertain an escalation clause. So you just want to make sure that they're allowed. Because if they're not, you want to make sure you put a strong offer in, and not just come in at the list price or a little higher with an escalation clause. Okay, lender choice. So this is something that people don't really realize, but it's hugely important. So when a listing agent is going over offers, one of the big pieces that they look at is who the lender is. Do they know the lender? Have they worked with them before? We tend to favor lenders that we've worked with before that we know do a good job. Usually those are local lenders, okay? So like I said before, my favorite is Amy from Finance of America. She's my girl, okay? If I can get a client to use her, I know there's not going to be a problem because she does work up front. She's going to check for anything that might be an issue in that first week, usually even before that, before they're even under contract. She's doing her homework to try to find issues. Now, a lot of the national lenders, okay, the big banks, for example, the Quicken Loans, those types, the ones that have the most money to spend on commercials typically are the ones that do the least amount of homework in my experience. They tend to overpromise and they underdeliver, okay? So with that being said, Rocket Mortgage might seem like the hot new thing or whatever. I'm not picking them out in particular here, but any national lender, they're much more likely to give you a pre-approval without verifying as much of the information. And then a lot of listing agents, they understand that. So when they're comparing offers, they say, well, this person's pre-approved with a local lender that I know verifies all this information. And here's a lender that I've never heard of, or here's a lender that, oh gosh, here's Wells Fargo, or here's TD. And you're like, I don't want to work with them. They're a pain to work with. They really are. They're overly bureaucratic. They make life miserable for the buyer too. I mean, forget about just this being a good thing for your offer. It's going to make your life so much easier to use a local lender, streamline the process. Nothing's going to go wrong. Not nothing, but it's going to go wrong less. They're not going to ask you for the same document 5 times from 5 different people. It's a lot more. There's less cogs in the wheel, so to speak. So I definitely recommend using a local lender. And the last thing I'll say about this, they know the market they're in, right? A lot of times when you use these internet-based lenders or the big banks, and you're like, you think you're getting somebody from down the street, and sometimes you do. But most of the time, I feel like they're, some guy from in Ohio or Idaho or some state nowhere even near your local market. You want somebody who's intimately familiar with what's going on. Like, let's say in my market, Central New Jersey. Okay, I want to know that they know this market because things do come up that are hyper specific to this market. All right, number 6, love letter, or what's called a letter of introduction. This is something that I think is sort of one of those soft parts of your offer, but it does make a difference. Introducing yourself, having a face to go with your offer, talking about if you have kids or if you have a dog, whatever, they're gonna love this backyard, and we're gonna cook all these great meals, like in your great kitchen, whatever. You just gotta make it. Don't go overboard here. Make it a paragraph. Have a picture. That's it. Or not. It's up to you. Whatever you're comfortable with. In an ideal world, I've seen a lot of success where buyers and sellers actually meet each other in the house or outside the house. Like I've had, a client recently that we met the seller as she was coming back from a walk with her dog, and very, very brief encounter, less than a minute. But you know what? They had such a good vibe that made the difference. Granted, my client used these strategies that we're talking about. It was a strong offer. They wouldn't have gone with them if they weren't strong, but it was the differentiating factor. She really wanted to work with them. And I'll tell you what, it does pave the way for a smoother transaction if a buyer and seller meet each other or have some idea of who they are, seen their face or seen their words on a sheet of paper, even just in a letter of introduction. It can make the difference to make your transaction smoother, because people tend to demonize one another. Oh, he wants this, I want this, therefore they're evil. Unfortunately, it happens, but that's also an agent's job is to kind of like smooth things out, get on the phone with the other agent, work it out, come to a conclusion, right? But these are 6 strategies that you can use. I know it's a tough market, but if you're not having success, make sure you're following your agent's advice. If they're not using all of these strategies, make sure that you bring this up to them. And if they don't know how to use it, tell them, or find an agent who will work, for you in a better way. Because sometimes, there's a lot of agents out there. You need someone full time. You need somebody who knows how to do this stuff. It's essential. Um, but not everyone does. Some people just work part time, a few clients a year, and they're not tapped in. They don't have a pulse on the market. You really need to be, you know, with somebody who has an understanding of how these things work and what the best strategies are, because they're always evolving too. There was a time where nobody used almost any of these, and then all of a sudden everyone caught up, and now I've got to come up with new ways to make sure my clients are sticking out. And that's what a good agent does. They innovate. They try to get their client an advantage as soon as possible. With that being said, if anyone has any questions, if you want to reach out, if you are in another state and you want a reference for a good agent in the area, happy to give that. If you're in North Jersey, South Jersey, whatever, feel free to reach out. Best of luck to you. I know it's a rough market, but hang in there, use these tricks, and I hope you have success.